in yesterday's session, KCB in the spotlight, saying yesterday that it would issue 1.1 billion new ordinary shares, raising its capital or share capital to 3.5 billion shares. What did the market make of that announcement? Because it was certainly not unexpected after its full year announcement, where it did say that it was planning to raise capital moving forward.
Yeah, Alishia, as you say, it was expected by the market, because when the company announced its full year results earlier in February, the chairman announced that the bank will be seeking to raise capital in the course of the year, and the amount that was mentioned was 15 billion Kenya shillings, and the reason was purpose of the proceeds was to finance expansion, as well as enable the bank strengthen some of the prudential ratios to enable it to expand its lending capacity. So, as you say rightly, the market was fairly expectant that at some point this will be announced. And again, it is also, in view of the nature of the decision, it required to be passed by the shareholders at the annual general meeting next month. So it was necessary for that announcement to come up fairly well before the annual general meeting.
Well, of course, we've got KCB already having operations in Kenya, Uganda, Tanzania, Rwanda and South Sudan already. What's your outlook for this group, where it has been amongst the most aggressive when it comes to expanding its regional footprint?
Again, as you say, it's been fairly aggressive, and I think there's an acknowledgement that it needs to strengthen further its operations within the region. But I think in addition to prior to the final year announcement for 2009, there was an announcement captured in the media regarding staff rationalization program. So I think there is an acknowledgement that the bank also needed to strengthen its operation locally in view of the investment that has been made in IT over the years. And therefore, there's an acknowledgement that it needs to strengthen its local capacity in addition to expanding regionally, because again, a lot of its income is from the local market. I'd say about 80% of the business in the Kenyan market. So in addition to strengthening its regional network, they also needs to work on its local operations.
Yeah. Well, certainly when it comes to local operations, we've seen both Cooperative Bank and Barclays Bank concentrating more intently on Kenyan business specifically. We've also seen these two banks announce interest rate cuts when it comes to their lending interest rate charged. Both of those share prices have crossed resistance, Cooperative's resistance having been at about 10 shillings and Barclays sitting at 55 shillings. KCB looks well set to test 24 right now. What do you see a share price movement being when it comes to KCB specifically?
I think one of the factors that also one needs to appreciate is the expected reaction with regard to the rights issue, because of the need to get as an incentive to the shareholders to enable them participate in the rights issue. You would expect that there would be a discount to the share price in terms of the expected price on the rights issue. However, also acknowledging that over the long term, that value would be reflected in the growth in the business over the long term. So I think those two factors, the balancing of those two factors, would be an important determinant to the share price outlook for KCB.
In the meantime, some of the other stocks that have gained attention, amongst those East African Brewries, trading at around about 171 shillings right now. It's trading at 18-month highs. We know that it recently launched Windhoek Lager into the Kenyan markets to kind of rival some of the increasing competition it faces in the market. Wind under the wings there for that company. What's your outlook with regards to its strategy?
I think there's an acknowledgement in terms of the launch of the Windhoek Lager. The company is looking at diversifying its product base in the market, obviously because of competitive factors and also in view of the economic situation, which had an impact on the volumes as regards looking at the announcement of their first half results. So I think the company is being fairly aggressive in terms of launching new products in order to counter these key factors that could affect the business. So we expect over the long term that we'll continue to see a lot of these developments in the market and in the industry.